Zambia's central bank increasing its main lending rate today by 25 basis points to 9.5%. Now, the central bank anticipates upward risks to inflation in June. For an analysis of the central bank's decision, we're joined by Noel Nkomo, CEO at Betanal Finance Company, joining us from Lusaka, our bureau in Lusaka, Zambia. Thank you very much for joining us, Noel. So basically, what we're seeing globally right now is central banks embarking on accommodative monetary policy. You've had that also coming through in Kenya, but you see the Zambian government looking at the inflation picture and concerned about upward risks to inflation. I mean, what is your evaluation of the decision that was taken today?
I think it was expected primarily because of the policy shift that I think we have experienced in the last 1 month, where the government of the Republic of Zambia decided to remove subsidies from two critical consumption kind of items, namely fuel, which saw the fuel subsidy removed and raising the cost of fuel to an average of 21%, and also the staple food, which is a maize meal, subsidy also being removed. So I think the Bank of Zambia is only responding to the challenges that I think that presents, and of course, especially the fact that they've also introduced quite a number of statutory instruments which also are going to be able to monitor and more or less regulate the foreign exchange market.
Just looking at that decision to remove the fuel subsidy, I mean, Zambians, of course, haven't been happy about this, especially the spike in fuel costs. Do you see them sticking to this path, even though there's been a lot of pressure on the ground?
There is a lot of pressure indeed, more especially that it happened more or less simultaneously and without any kind of sensitization for people to be able to anticipate this kind of decision. More or less, more especially that you're talking about an economy or a country where 70% of the population is in abject poverty. So I think the pressure will continue from civil society organizations, but we don't see the government backing through, because I think they are hoping that the money supply will remain stable, and as such, this will be more or less like a pass-through effect. But indeed, there's a lot of despondency, more especially in the urban population, where they are seeing this to be more or less a turnaround in terms of the promises which the government had given on the campaign platform, which ushered them into government.